at the same time. So today's episode has been is going to be similar to events in the past. I have another special guest. And as you can see from his profile picture, it was so cool. I had to put both pictures up, his avatar as well as his official picture. Today's conversation is going to be similar to conversations in the past, to share information with the viewers on things that they may or may not be aware of, that they need to know, that can help them in some kind of way for their business, as well as give them a point of contact that they can reach out to have further discussions on how this service can help you with your business. We are in the officially in the tax season, so obviously taxes is something that's important to all of us. But as business owners, we don't always know what type of deductions we can take. We don't always look at the overall processes that we have within our organization, and how we can use those different processes to minimize some of our taxes, while also looking for ways to recoup some of your tax dollars, as well as decrease your overall expenses, so that you don't have to necessarily go back to try to recoup, but putting some processes and policies in place up front that allows you to maximize your tax dollars early on within the process or in the structure of your organization. So today, my guest is Mr. Gerald McAdoo II. He's not related to Bob McAdoo, as far as we know. For all of you NBA lovers and Laker lovers, you know who Bob McAdoo is, as well as, I guess, if you're a Miami Heat fan, you probably know who Bob McAdoo is. So I have to put my basketball analogy in there, or somehow link it to basketball. So once a Laker, always a Laker in my mind. But anyway, welcome, Gerald.
Thank you. Good to see you, Shirley. Thanks for having me.
And thanks again for being here. I am going to get started with our conversation because, again, what you do, I had the opportunity to watch you do a presentation with 1 Million Cups, and it was things that you shared that I thought other people could benefit from. So I'm glad we have this opportunity for you to be here today to share with other viewers, and hopefully they will find it as beneficial as I did.
I appreciate it. I hope so too. And by the way, I do have a pretty good jump shot from the wing.
Oh, okay. All right.
It's more of a set shot now than a jump shot, but.
Okay. Well, we may have to hit the courts one day so we can see your skills on the basketball court. So to get started, why don't you tell us a little bit about your background and your journey, how you ended up to where you are today?
Sure. Well, I'm originally from Michigan. Detroit, Michigan is my hometown. Live now in the Dallas, Texas area, as you know. Been here for 26 years.
Oh, wow.
I'm actually an engineer by trade. I'm an electrical engineer.
Okay.
And went back to pick up my MBA after really learning I really like the investment markets.
Okay.
So that's kind of what brought me to the Texas area. I started out managing pensions and endowments, and then moved on to managing high net worth individuals and families' monies. Did that for a good decade and a half or so. Overlapping that, but separate, got involved in commercial real estate. So we bought, sold, managed, capital raise, still do a little bit of real estate now. Always loved it. Then I had my period of what I call sowing my entrepreneurial oats. So we did that, various levels of success. But I think what we're doing now is kind of germinated, where some of those ideas came from, is when I was managing money for individuals. So I'm managing money. I'm responsible for the buy, sell, hold decisions of stocks and the full range of investment services. So I'm in the office. Others are out building relationships with clients, but I'm in the office. So clients would call me to ask me about investments, and we would end up talking about a range of things. I would be, working and talking with a manufacturing client, for instance, and we were talking and said, listen, I've been reading up on your industry, and you were talking last time about some of the turnover that you're having. So, I've been hearing about these tax credits and things that you can get for hiring employees. You need to look at that. I don't know anything about that, but that's something you may want to take a look at in your business. So having a range of conversations, that's really began to kind of germinate with us. So fast forward several years, and what we do now, it really is that you start to learn. I started to pick up that there's a difference in the type of information and resources that are available to some of my mainstream clients versus those that worked at, say, the Fortune 1000. There was a different level of access to information and resources. That's where that idea started to come to me, that, or maybe not the idea, but the recognition that there's a difference in terms of ability and resource. So fast forward to now, that's really what we do, is we try to bring that same resource to Main Street business owners. We feel they don't get the same love and attention that others do.
Okay, yeah. And it's probably because a lot of times people don't know, right? Or is that what you encounter often, that they just don't know, and it takes someone willing to have a conversation with you in order to learn a little bit more about some of the opportunities for them to save money?
Oh, absolutely. Just some of the resources, some of the strategies that are available, people that provide those strategies. Everyone's talking. Companies, the largest companies in the country, in the U.S., have been doing these things for years. They have teams of people that do these things. No one's talking to the small business owner.
Yeah,
that's exactly right.
Yeah. And that's one of the beauties of having so many people now that I come in contact with. They want to help the small business owners and catch them as early in the process as possible, because if you can catch them within the first couple of years and help them set the foundation, it will set them up for more success down the road.
That's right.
Yeah.
That's right.
Okay. Well, thank you for that. And thank you for sharing your journey. And like always, I always have questions. And so I want to jump into the questions, and we'll just take it from there.
Sure.
So the first question I have is, if you can share with us some of the systems that you can use to identify profit leaks or cost savings that are not identified by maybe a CPA firm or an audit firm, if that makes sense.
Sure. Well, to set the foundation for that a little bit, business owners, cash is very important. Cash is always king, right? And when you think about it, business owners go into business to do what? To make money.
Make money.
Every business owner, every executive, I like to say, goes to bed and wakes up in the morning thinking about how they can increase their cash flow or reduce their expenses. So, no one needs to convince them that they want more of that.
So.
And they will use that cash flow to, improve their business, for adding people, building and establishing new markets, documenting their processes, adding equipment, depending on what industry in. So cash flow is always important for growing and improving the business. CPAs are tasked with compliance, ensuring that these various, enterprises, businesses are accounting for the costs and the profits correctly. That would include, internal as well as external audits, building financial statements, and certainly for taxation. If the CPA is forward-thinking, they might help the owner to better utilize or account for certain business costs, using some known accepted methods for taxes, tax-efficient investment or retirement, employee benefit plans, and such. But even that, again, is not their primary function. And I say we, I'm saying our resource team at Snapshot, have a slightly different perspective. We believe business owners should never leave money on the table. That's the first rule. Don't leave it on the table. They should never pay more in taxes than they need to.
Okay.
And they should, again, as we mentioned before, they should have access to the same strategic information that some of the largest firms in the country have access to. So we work with both of them, and with business owners and executives that we're engaged, they should and want to focus on their core business, where and how they make money, their products, their services, cost structure, profitability, the core of their business. And then certainly with their tax professionals to account for that. We guide them to discover, or rather uncover, the cash flow already existing in their business, and it exists in areas that neither of them are really focused on. And I'll say this: we are generalists and specialists. We're flying at the 30,000 foot level, sharing a perspective from a different vantage point, identifying areas worth exploring of immediate, one-time, and even recurring cash flow. And then we drop down to 500 feet to execute on those areas of savings without disrupting their business or their vendor relationships, and we do it on our own dime. Okay. I know that sounds like that's a lot. The perspective I have that comes to mind, and then I guess it just appeals to my sensibilities. And this was a few months ago. We were visiting at a friend's house, and we were all kind of in the living room and just kind of chatting and catching up. But I could actually see out the patio door that one of the kids was out there playing, kind of in the dirt and the grass, and had been out there quite a while. Then he finally came in and kind of had his head down, and he said, "Mom, I'm really sorry. I can't find my contact lens." And she said, "Oh, okay." So she excused herself and walked outside and came back in a couple of minutes and said, "Oh, here it is. Go wash it off," and so forth. And he looked up at her and said, "Mom, how did you find in 2 minutes what I couldn't find in 30 minutes of looking?" And she said, "Oh, we weren't looking for the same thing." She said, "You were looking for a contact lens. I was looking for $250. That's kind of what we do. It's a
that
different
is a great analogy. Yeah. Okay. That's a great analogy. And so with that, you said no cost to your clients is on your dime. Do you want to touch on that a little bit more?
Sure. Well, in the 16 years of us doing this, of our team really being together, we understand what works. We're able to identify opportunities, and which of those will bear fruit and those that won't. We've developed proprietary software to help identify some of those opportunities. So number one, once someone is determined, and we try to help them determine, you don't want to leave money on the table. But number two, we have tools to help analyze that we can direct you to help you determine, okay, what is an opportunity you can explore, what makes sense for you and your business, as well as what is the potential savings for some of those things. So in a 15-minute conversation with me, we can determine what some of those things are. Or those that engage with us, we're going to execute our own dime, and then we share the success. So we're paid for execution, not just for the idea.
Okay.
I understand there's some that won't have 15 minutes, so that actually they can email me and I can send them, a tool that can help kind of put them on the right path.
Okay, that's interesting. So you're basically putting your money where your mouth is. We can save you money, and you don't have to pay until we actually do it.
Yeah, that's right.
Okay, cool.
Once they understand and believe that, they tend to enjoy that part of it.
Yeah. Because if they're having cash flow issues, they may not, one, be ready to invest in that, but two, they may not have enough cash to invest in it. So that could be a win-win for both sides.
Absolutely. Yeah. No, you're exactly right about that.
Yeah. So does your system work in specific industries, or does it kind of cross over to all different industries?
That's a good question. We're industry agnostic in terms of all small and medium-sized businesses. We do have some large firms that we work kind of as a back office, but yeah, any industry. Think of it this way, just to look at the tax side of it, because we're dealing with US tax code, that applies to all businesses, not just a particular industry. Now, there's some industries, depending on how a business is actually structured, there'll be some services that be more akin to the one industry than another. But just as a large scale, if there's someone that owns or uses commercial property,
Mhm.
or, and these are ors, not ands,
Okay.
or they're hiring or have existing employees, or if they're doing anything that's technically related, as more businesses and the various industries are doing right now. If they're doing any of those, then there's someone that usually at least one of our services will help.
Okay. Okay. That and that's obviously one of those things that we like to see and make available to people, because a lot of times people think, one, you have to be a certain size, and two, that, oh, this tool doesn't work for my industry. Well, saving money is saving money, and that
Exactly.
yeah. So,
Exactly. Matter of fact, I can, I know we had talked before, I can give you an example or two. I know
yeah,
that
this is
probably
probably,
sounds
yeah,
kind of
good time
weird
for
to some
that.
of your listeners.
So,
Let me see, can I share that? Okay, I'm gonna try to share my screen here.
okay.
Is that coming through there?
Yes.
Okay. Okay, so, and I hope this is a relatable example. I chose a restaurant in this case because everyone, every state, every city, every community has a favorite restaurant, neighborhood restaurant, and ones that we want to make it through this pandemic. And I can tell you, many of them, will not. Some already have not. This is deeply passionate to me because there actually was a neighborhood restaurant that was a favorite of ours, my wife, my kids. This is prior to COVID. Tried for nearly a year to get in touch with them. And right when COVID happened, reached out to them again, was not able to connect with them. So I'm hoping this doesn't happen again. It's given me a deep passion to help all of the other 30 million businesses that are out there. But typical example in the community. So just as a backdrop, this one, I picked a small restaurant that hires about 10 people a year. They have about 25 employees on staff. They do, in this case, own commercial property. I just picked $1 million. That's fairly common in our area or more. Again, with COVID, they were affected by the pandemic and they were shut down for some period of time. Certainly impacted their revenue and their profits. And in this case, I just picked that they were located in the Houston area.
Okay.
So that's kind of the backdrop situation. It's a neighborhood restaurant, not a large restaurant, not a chain restaurant, just a local restaurant that you and your family will visit. What are we able to find? Well, a few different areas. And this just focuses on, I'm just focused on some of the tax opportunities that are available, and some of these through a recent bill, one through the CARES Act, but they actually signed something called the Consolidated Appropriations Act in this past December 21st.
Okay.
First is the, I call it WOTC, it stands for Work Opportunity Tax Credits. So hiring tax incentive. So there are tax credits, a dollar for dollar offset against taxable income when you hire people that fit in a number of these disadvantaged categories is what they refer to them as. So just as an example, and this has been around since World War II, actually they were the first in this category. If you hired a veteran, they quickly added, and that was as an incentive, again, to hire veterans that were coming back from the war. They added to that after not too long, those who had served time that were ex-felons. And they went on and continued that way for quite a period of time until the last 10 years, and particularly the last 5, where they've added all types of other categories to it. So if you just live in a certain area, they call them apartment zones. You can get a tax credit for hiring that individual. If you
what zone? You call them what type of zone?
empowerment zones.
Oh, okay.
So areas designated by Congress, and they change them from time to time.
Okay.
So you have to stay on top of it. They have, if you've been unemployed for a period of time, a larger percentage of our population has been unemployed for a period of time now that will fit and could qualify for this hiring tax credit. If you or someone in your household is on some type of federal assistance, like a SNAP or a TAN program and some youth work programs, there are dozens of these areas of potential tax credits that you can get for hiring someone that fits in one or more of those categories. It ranges from $900 on the low end to $9,600 on the high end.
Wow.
So again, can start to add up if
Yeah.
you're hiring, and you won't be able to tell when they walk in the door. Just on some of the things that I mentioned, those are not things that are asked in the interview. Those are not things that people are going to want to share. But because of the way our system works, we're able to gather that information for them that they would complete and fill out. And we can determine on the company's behalf whether or not they will qualify and to what extent for some of these hiring tax credits. But that's a dollar for dollar offset.
Yeah.
If the business is located, there's another area that was another tax credit that was created, this disaster retention credit. If you are operating in one of the currently 282 counties, you can actually get a tax credit that's up to $2,400 per employee per year. So now for 2018 and 2019, we can actually go back and capture that tax credit for a business. And let me just give you an idea of just some of the new ones they added this year. I won't read all of them, but it'll take all our time.
Okay.
They added counties in California for wildfires, in Florida, Hurricane Sally, Louisiana, Hurricane Laura, Hurricane Delta, Michigan, severe storms and flooding, South Carolina or Tennessee, severe storms, tornadoes, straight line winds, floodings. They add these things on an annual basis, but this is one area that I haven't found too many people talking about or certainly leveraging.
Right.
Now, I'm sure one of the big numbers that people are paying attention to is this COVID employee retention tax credit. That was a new tax credit that was created through the CARES Act and enhanced in the sign up this past December. So right now, just to keep it short here, or running on too long, we can now get, well, let me give you one thing before I do that. So PPP, everyone was certainly interested in PPP round 2 and round 1 and round 2. You didn't hear a lot about this employee retention tax credit because PPP was there. And that was a loan incentivized program to keep employees on. This is a tax credit program to incentivize employers to keep them. You had to choose. It was one or the other. So because all the media attention was for PPP, you didn't hear much about ERC. And if you did receive PPP round 1, you were ineligible for ERC anyway.
Okay.
So with the signing of this new bill in December, now we can actually go back and capture that for it. It's been repealed. So now if you've gotten PPP round 1 or even round 2, we can now go back and capture this for you. What does that mean financially? That means for each employee, we can go back and get up to $5,000 per employee for 2020. And they've actually extended this now into the first 2 quarters of 2021. We can get up to $14,000 per employee in 2021.
So can companies use that to one, incentivize employees to stay, but can that offset what employees would receive if they went on unemployment? Because that's one of the arguments that we continue to hear, that these people are getting more by sitting at home, picking up picking up unemployment versus going back to the job. So can you kind of use the money to do a bump up, even if it's a temporary bump, until things stabilize?
So, well, let me tell you this, it's very complicated.
Okay.
The calculations that go into proving it is very complicated. But let me give you the two major areas so you understand they calculate it as well as how it's used.
Okay.
So there are essentially two qualifications. One, either, and this is an either or, either you were partially or fully shut down due to COVID. So question for the listening audience, so were you guys shut down at any point due to COVID? Second qualifier to look at, and again, remember it's either or, is looking at gross receipts. So for any quarter of 2020 that we compare to the same quarter in 2019, and if there was a 50% or more reduction in gross receipts, then you can qualify that way. So again, for the listening audience, just as a barometer, thinking of it that, were there any quarters where there was a significant drop in gross receipts? So it's one or the other.
Okay.
If you were shut down for any reasons or for gross receipts. That's the calculation for it.
Okay.
Now, in terms of how it's actually used, it's actually, it's a payroll tax credit. So you can offset your payroll taxes. So if a company is paying, say, biweekly, and let's say we did actually capture this $350,000 for this restaurant, then that's since set aside. Now their weekly payroll comes up, and let's say the corporate portion of that is $50,000. Well,
Okay.
now there's a form that they would complete, and instead of them writing that check for the whole amount, including that $50,000 as the corporate portion, they can hold that back, and they could use that money for something else. And there are no stipulations on what they could use that for. So it's an immediate, once this calculation is done and they receive the credit, it's an immediate use that they can use to redirect in the other areas of their business. And that's, you continue to do that until that credit is used up.
Okay. Well, that definitely should help business owners, even if they, when I said before, they could use that to whatever they are getting, the employees are getting on unemployment. Well, maybe it could just be a matter of raising their wages, and that would make it even more, I guess, of an incentive for them people to continue to come to work. It may not be the $15 an hour that people are pushing for, but it may still be more than what they would get if they were getting unemployment.
Oh, and let me add one other thing to it. It's not one or the other. Many of these things can be stacked.
Okay.
So even when you think about hiring someone, so let's look, PPP, for instance, round one, it was 6 to 8 weeks of payroll you can get, not 6 to 8 weeks of the total business costs, not 6 to 8 weeks of even the business loss, just the payroll costs. Now I look at, okay, I could potentially get, I mentioned the range of the hiring tax incentive of $900 to $9,600. The average across all industries, all size businesses for us is about $2,400. So I can get $2,400 in a tax credit for hiring an employee. If they happen to be in one of these disaster areas, I can get another $2,400 for that individual. Looking at employees that I've had, well, boy, I can get up to $5,000 per employee for 2020. We start to add on some of these other things I mentioned. Let's say they're involved in doing something in a technical field. There might be another $2,000, $3,000, or $4,000 for that. We haven't talked about some of these other incentives we have. If you start to do the math on that, someone's going to say, well, wait a minute, Gerald, you're kind of approaching my total cost for payroll this year. Absolutely. That's the point. Now, that's not what we're saying. I'm not out there talking to people saying, listen, let me take care of your payroll costs. But that's the essence of what we're doing. When you're a business owner and you start to look at what's the cost to retain, I need to add some employees, I need to train them, I need to look at what's the cost, what's the investment that I'm making. This can begin to offset that. And now they can begin to redirect those funds into other areas of their business.
Right, yeah. Well, and a couple of other things that you mentioned for the WOTC piece is the hiring of veterans. We know there's a lot of initiatives out here now to hire our veterans, as well as support them with their small and medium businesses. But then also you mentioned, say, ex-cons many times that they can't be hired, but we know that just because they committed a certain type of crime doesn't mean that they are thrown away or we should throw them away. And they could be very loyal, long-term employees. So being incentivized to at least consider that if your business doesn't require, say, any type of security that would prevent them from being hired, definitely a good pool to pull from.
Oh, absolutely. And think of that business owner who needs employees, needs workers, willing to train them, will do the work. This isn't the only reason that they're going to hire someone. But when you look at the candidate pool and they need workers and they have someone willing to show up and do the work, now there's an additional financial incentive to hire them. Again, that speaks right to their bottom line. That speaks to the cash flow they need to create in their business. Absolutely. Yeah. And I will take just the two you mentioned, veterans, ex-felons, those who have been unemployed for a period of time, they're going to be at the higher end of that range that we spoke about.
Okay. Wow.
And that same person that now they are getting a tax incentive for hiring them, that doesn't preclude them from any of the other tax credits or tax savings.
Okay.
It's not one or the other. We work with them to help them stack these things appropriately.
Okay, cool. Yeah. Yeah, we could probably go on and on that one.
We could, and we haven't talked about, in this case, the restaurant, they own a building, but again, you find a number of restaurants, their locations, they don't own the space that they're in, but they've done significant improvements to the property to get it ready. They qualify for this commercial property tax. It deals with accelerated appreciation. The technical term for it is cost segregation. But even in this case, we subtracted out for that small restaurant, neighborhood restaurant, we're still talking estimates of $400,000.
Yeah.
So what could someone do with that if you had an extra $400,000 in the pocket you could plan for?
Right.
That's the other key question. It's not just having money in the pocket, but how does that change your strategic outlook going forward? Can you keep some of those employees that you want to keep? You need to grow your staff because you're delivering from the curb now. So now I need more employees. Can I hire those employees?
Right.
You know what?
Yeah.
There's some prime locations that I would like to be in. Now I've got some money. I've got some options. I can begin to look at actually growing my business. I need to document my process. I'm thinking of, I want to exit this business in 3, 5, or 7 years. Many business owners are in this position now. They know they want to exit at some point. They don't know how. They need to put a team in place to do that. Now I've got some funds to begin able to plan and do some of those things strategically.
Absolutely.
So it can completely change your outlook when you begin to have some resources.
Yeah. Okay.
Yeah. I'm sorry, I can get started on this.
Okay.
Go for a while.
It's interesting stuff. And again, it's one of those things that many people may not be aware of. And so just being aware, even if you don't qualify at this point, hopefully the intent is to grow. And worst case, you can qualify for at least the WOTC credits. I hope we don't have any more COVID or any other, I just think the natural disasters are going to be around for a while, but hopefully we won't have a pandemic. But nevertheless, this is today, but there's always changes. And so being able to stay up on any new type of incentives continues to keep you ahead of the game.
Absolutely. Right now, with this new bill that was signed, 99.7% of the businesses in the country could qualify for one or more of these.
Wow. Okay.
And again, I'm going to tell you, the large companies, they're already playing this game. Let me give you just a quick example on the other side of this. So several years ago, knew someone who understood some of the things that we offer and said, hey, you need to talk to this one company. They're relocating their headquarters to here. If I mentioned the name, everyone would recognize it.
Okay.
I knew about the company because I had invested with them. Very well ran, probably top 5 in revenue in the Fortune 500 at this time. So it took about 3 months to arrange this meeting. I kind of knew where it was going to go because I knew the company pretty well, but I'm not going to turn down a meeting with a Fortune 5.
Right.
Had a meeting, went through our presentation and some of the tools, and came up with a list of different services and potential savings. And I turned to him and said, well, what do you think of that? Does that appeal to you? And he said, well, Gerald, you mentioned energy management there. He said, we actually have someone in California that does nothing but look at how much we actually spend in terms of energy every year and month to month, and tracks it. They look at our energy consumption and what we're doing. He said, so we kind of have that part taken care of. He said, I see you have some of those property tax incentives, but we actually have a team internally that looks at all the properties that we spend to make sure we're taking advantage of all the incentives that are available for commercial property ownerships. And they actually coordinate with our external team of accountants. And they work together to make sure we're strategically looking at these and how we ought to play with those. And just very graciously walk down each of the different services that we offer and essentially said, we have it taken care of. Again, I knew that coming in. The largest firms in the country are already doing this. They've been doing this for years. We believe that Main Street business owners aren't getting the love and attention that they need. And they should have access to these same cost remediation strategies that they have. Yeah. They're doing it.
Yeah. That's cool.
That's cool. And I had another example. I don't know. I don't know if we've overdone it. Same thing, manufacturing space. You're gonna have some few different qualifications there, but significant dollars to them as well.
Okay.
So the point you brought initially, regardless of the industry, we've had success with helping them qualify on one or several of these different areas.
Okay.
And let me stop sharing again. There we go.
Okay. Well, again, knowing that is important because there are different industries, as you know, that have unique expenses or line items that they need to figure out how they can maximize their use of their funds, as well as making sure that they have other processes and procedures in place for the overall running of the business. And so one of the questions I have is too, when you do your analysis or they go through your initial assessment, is it sometimes a one-time event where you find the savings and they recoup that and that's it? Or is it something that you can do ongoing and continue to capture more savings?
Oh, that's a great question. There's a lot of good questions. I
try to do my homework.
Okay. No, yes to all. Yes, there are some one-time incentives, such as we're reducing the property tax on commercial property or helping them take advantage of accelerated depreciation. Those are one-time. In most cases, literally can be worth hundreds of thousands. It's usually a six-figure return. And it's one time until they make significant renovations to the property or they buy additional property. So yes, there are many that are one time. There's some that are ongoing. We were talking about the hiring tax incentive. Well, as long as they're hiring employees, they can begin to capture those things. As long as they're doing, something technically related. Every manufacturing company, engineering company, consulting company, architectural engineer, they should be taking advantage of Section 41 of the tax code, which deals with research and development tax credits. For some of those startup companies that are founders, they don't have a lot of revenue, right now. They don't have a lot of profits, but there's actually a kind of a subsection of that with the startup tax credits. Well, for that one, we can actually go back to 2000. Right now, we can go back to 2017, 2018, 2019, and yes, for 2020, and go back and capture those tax credits for them, and then begin to do it every year in the future. So absolutely, the disaster credit, we can go back to, again, 2018 and 19 now, we're always going to have exact disasters. They continue to add counties to those things. So that's ongoing.
Yeah.
So, and I know as I'm talking through this, someone's probably thinking, man, this is going to take too much time for me to learn. I don't have time to do this. Many of these things don't take as much time as you think. So let's chat about it. 15 minutes, we can help determine what fits for you. So one, just don't leave money on the table.
Right.
Two,
Yeah.
find out where the money is. But
Uh-huh.
number three is we can help, we can execute on your behalf.
Okay.
Or put you on the right path so that you can do it on your own.
Okay. So with a small company, typically there's only the manager or the owner, and they may have some employees. But say if it's a company that may have 10 to 50 employees, who would be your primary point of contact or your ideal point of contact to help get the conversation started?
Usually it's the owner or the C-suite person, the controller or CFO, someone who has profitability interests. But in many cases, I've been introduced by an employee of the company that wants to save the business because they want to save their job because they don't want to be home without work, and they've introduced us to the business owner or to the manager. All of those words. We want to have those conversations because we want every community. If the small business market went away, there isn't a community in the country that would not be affected, significantly negative. So we want to help them. So however we get in to meet with that person, that's what we want to do. We really want to be a lifeline to them.
Okay. Well, then once they actually work with you and you recover some savings for them, then do you work with them to develop processes and procedures to continue to make sure that they are as efficient as they need to be in order to not have a future profit leaks or where you have to come back in and do a recovery for them?
Well, yeah. So yes, in terms of the services that we offer, but we know our scope and we play well in that box. But we will work with their again, like their CPA and their tax professional. Yes. Their controller, their CFO, absolutely. Now, if they need help with, for instance, documenting their processes, which is important for them to do, we don't do that, but we can certainly refer them to someone that does that and does that very well. If they're looking at exit planning and they're thinking, how do I, work towards an exit of my business in 3 or 5 or 7 years? That's not work that we do directly, but we can certainly refer them to someone who can help maximize their business. Absolutely.
Okay. That makes sense. You good for say you can't do everything, right?
No, exactly. I'm not a business coach. They need a business coach. They know they need it. Now they have the funds to do that. Shirley, this is your time now.
Okay. All right.
Absolutely. Yeah, we know where we play very well in our sandbox, but we're not everything to everyone. So we want to work with strong professionals that we know are going to take care of our clients, and we want to be very professional with working with anyone that we referred into.
Yeah, and that part is important with any business today, and it's something that we continue to talk about with different businesses, to have those strategic partnerships so that they can have someone when they need a particular service that they can go to them, but also if they have a complementary type partner, that you do this piece, I do that piece, and you refer between each other. So yeah, so I know CPAs are one area that that would be a good partner for you. Are there other types of businesses or industries? Well, not so much industry, but types of professions that would be a good complementary business for you?
Sure. Well, certainly we end up working with all our clients, CPAs and tax professionals, certainly CFOs, but if I looked at just if you believe the IRS, and our
Okay.
experience bears this out, in the country, over a smidge over 92% of those that own commercial property haven't taken advantage of cost segregation, accelerated depreciation. So finding someone who is in the commercial real estate brokerage business,
Okay.
absolutely good contact. We can certainly help. I mentioned CPAs and tax planners, exit planners. Anyone who has access to or wants access to business owners is probably going to be someone that we could help and work with.
Okay.
And I would actually want to know, because I need, about this time of year, but certainly all the time, clients are asking for referrals to people related to work that we do, and sometimes unrelated to what we do. And certainly we want to have good people to refer them to.
Yeah. Well, and then so the other thing would be them engaging with you because you are the expert in this area. And so as tax laws change or new incentives are there, you would be the point of contact to help keep them up to date on any of these opportunities and making sure that they are not allowing dollars to slip through the cracks that they could have recouped or taken advantage of by working with you. Is that a fair statement?
That's exactly right. New bill is passed. The House and the Senate this December, just again, as another example, business owners have no idea what it means to them. On the other side of the coin, CPAs are tasked with, assimilating and applying these provisions to their client base. That's a daunting task, to say the least.
Right.
We're at a different perspective that we can work with their CPA in this case. This is how this bill can apply to your client base. And for many of them, it's us doing the work for them. Maybe this is a little bit early. Just to show you, this is, I was referred to a client that owned a number of restaurants. And it took me about a year to get in touch with him. I was a business friend referred him to me, but still took a year to get in touch with him. And finally got in touch with him about a month ago. And he said, listen, I've had this CPA for years. I like them. I work well with them. You talk to them. If any of this applies to them, they'll let me know. Well, sure, I'd love to talk to him. Called him on the phone. We had a chat, went through our analysis, showed him what services we could offer and what the dollar savings. And I stopped and said, well, listen, would any of this be beneficial to your client? And he paused for a second and he said, Gerald, this would be significant for all of my clients. He kept talking. So I was furiously taking notes. I knew he was about to say something. Let me read you some of the things he said. He said, this is something that is a niche that you would have to specialize in. Just simply providing compliance services to 500 to 600 clients doesn't allow me time to research, learn these things, learn these tools. I would have to give up my compliance practice to make this transition or go hire somebody and hope that they're actually competent, which is hard to find.
Right.
That's within the last month, and that's not unusual. That's a sentiment that's shared. So we really are interfacing and partnering with tax professionals, for instance, and others. Those that I would say that really understand what we do and what we can help them with will begin to utilize us really as a client retention system for them.
Okay.
And those that really get it start to use us as a client acquisition system for them.
Okay. All right.
So we really are in partnership with them and can really help them in their practice.
That's awesome. Okay. That's cool. Well, I know, we've been going on now almost an hour and we covered a lot of stuff, but again, all very interesting. And I'm glad we had this opportunity to have this conversation. Do you have any other things that you think people need to be aware of and that you want to share with them?
Oh boy, we're gonna need enough time. You may have to invite me back.
Okay.
We talked just about some of the specialized taxes. We haven't talked about any of the expenses yet.
Oh
and
boy,
those
okay.
Can be expensive and ongoing as well. That, really impact the profit margin. So
Wow.
Yes,
Yeah.
much more to share. I hope,
Well,
hopefully be a benefit, but.
well, I'm going to put your contact information up on the screen. Hopefully I go and get this information myself. But yeah, we can definitely do part 2 if you like to talk a little bit more about the expenses, and so that they can have a full snapshot of snapshot, no pun intended there, of all the different pieces that go along with the processes that you have in place.
Yes, no, that'd be wonderful. If I would leave with anything, it'd be, again, this number one, just decide, don't leave money on the table. just don't do that. Number 2 is find the money. A 15-minute, they can go to our website, 15-minute chat with me. We can help you determine what are some areas that you ought to explore and what are the potential dollar savings to you. And then again, for those that engage us, we're going to execute on their behalf. So you won't have to worry about it. You concentrate on your core business. For those that don't have 15 minutes, I understand everyone's busy. If they email me, I can send them a tool that they can actually begin to do some of this analysis on their own, and be more than willing to do that.
That's awesome. Okay.
Yeah.
Well, then I have one final question for you. If you could go back,
Did I lose you?
It's like I was like, I thought I lost you for a second. It's like I was trying to take away the slide, and then it's like, oh my gosh, did I end the call? If we could go back to a younger Gerald, and you could give your younger self some advice, what age would you go back to, and what would be the advice you would give yourself?
Oh, that's a good question. I'd probably go back to mid-20s.
Okay.
After I graduated the graduate program in business, your head's full of all this knowledge and information. I mentioned I'm an engineer, so I have the tendency to overthink and overanalyze, and frequently did. And just a quick example, I remember being at a dinner table with someone, and he was trying to sell me something. I wasn't interested in it, had some experience with it already. He's asking me questions, and he looked at me, he said, "Gerald, you're the kind of guy that before you left your house to go downtown, you want to check and see if all the lights are green." I said, "Oh, yeah, of course I want to do that." But it's overthinking. And what I'm learning, if I could go back and give advice, is, thinking is appropriate. You want to plan, you want to strategize, but put things into action. Take massive action, and then learn and adjust. It really goes back to, we've heard that you can't steer a parked car. It has to be moving. So it would be to do some planning, but to take action, and I would say massive action. Learn and change your plan, adapt, and keep on moving down the road.
Okay, good. So being a little bit spontaneous too, I take it is in that, because sometimes we can be too rigid because we're planners, and then we don't allow for some last minute opportunities that yeah. So well, that's
you
good.
have to have all the answers.
Yeah.
And so you don't move until then.
Yeah.
That's right.
Yeah. And then we learn that things change anyway. So it's like those answers are as good as the moment. So
that's right. That's right.
Well, thank you so much again. And yeah, we'll get the part 2 on the calendar so that we can get that out for the people that's watching, and for the people that's actually watching. If you're watching live, or if you come back and watch later, our contact information was on the slide. I, being a business and life coach, I like to work with clients to help them figure out when they may need to contact someone like Gerald, because a lot of times you're trying to run the business and you don't necessarily pause to think about efficiencies, and where you can start looking to make sure that you are capturing all the types of refunds or credits, or just overall with the financial piece of running a business. And so my job as a business coach is to help be another set of eyes and ears that's going to help you not only recognize that you're missing out on some things, but also to help connect you with some people that can help you in those areas. So thanks again, Gerald, and you have a wonderful weekend, and I will be in touch.
Thank you. Thanks for giving me the opportunity, Shirley.
Absolutely. Bye-bye.
Bye-bye.